Leon Campher, CEO of the Association for Savings and Investment South Africa, joins us from the Cape Town studio. And we're focusing now on Collective Investment Scheme's quarterly report on flows in the industry. Net inflows in the third quarter were 15 billion rand, a significant improvement from the 4 billion rand we saw moving into the industry in the second quarter of the year. Leon, appreciate your time. That big jump from 4 billion in the second quarter to some 15 billion now, and the 15 billion is closer to what we saw in the first quarter, which was at 18 billion rand. Why the difference with the second quarter? Have things changed dramatically?
Bronwyn, it's very difficult to establish accurately, but it would seem that investor confidence has improved. And I think the fundamental issue over here is that for a while investors have been in money market funds. We've now seen a huge trend away from money market funds into asset allocation funds, which we believe is a good thing.
Let's focus on this trend and why asset allocation. Why are we seeing that high on the radar screen of investors out there?
Bronwyn, I reckon a lot of the investors have decided they don't want to pick the sector, they don't want to pick the underlying asset, and they're leaving it up to professional fund managers to do that for them. And that, I believe, is why asset allocation funds have done very well over the last quarter and will continue to do well, I think.
And Leon, when you look at the actual distribution channels, you said that what we're seeing over the last quarter was that lots of guys going via intermediaries, but yet the intermediary sales are still down. They're down to the 30% level from, let's say, the 40% level. Do you think this is a trend? Are there fewer intermediaries around? How has all the legislation affected the intermediary market? What's the impact been?
Wayne, I think it's a very good question. I think two things. I mean, the trend has definitely been for direct investment is increasing, and from institutional pension funds, a lot of that money is coming from that sector into the mutual fund industry. In the context of the intermediary, the decline, it's difficult to put a finger on exactly why. But I think there are a number of issues there. I think a lot of intermediaries have been very busy writing exams to qualify in terms of the new regulatory exams. And, they've got to be out in the market doing sales. I think that's one issue. I think investors, however, are more and more kind of doing their own thing. And I think that's a trend which will continue.
In terms of an offshore focus, Leon, that's certainly a trend that I'm picking up, speaking to fund managers across the board. Is that also prevalent in the research that you've done, the offshore focus?
Look, I mean, the offshore funds that are registered and sold in South Africa is now about 124 billion. It's about 1.4 billion down in terms of outflows, but there's still 346 foreign funds available for investment here. And I think exposure to offshore, initially, people used to think if the rand's strong, we've got to have offshore exposure. But I think they're also getting a bit wiser and saying it's not just a currency thing. It's actually, am I going to get the returns in the markets I'm investing in? So it's a combination of both.
Leon, you're very close to the retail industry. What's the mood like? How do people feel about South Africa, about investing in general? I mean, we see the statistics, and I've learned also quarterly statistics, doesn't necessarily define a trend that people are now automatically becoming less risk adverse. I mean, I know these fund flows, sometimes a big institution will choose to put money in their unit trust instead of in the on-balance sheet fund. So there's a little bit, I wouldn't like to call it double counting, but sometimes the numbers aren't all quite what they seem. But what's the general feeling out there? How do people feel about South Africa and the world's economy in general?
I think, Wayne, on average, people are worried. It's strangely enough, I mean, we're a country with unique problems, but we seem to find our way through them mostly. I think a lot of people are worried about the world, and they're very worried about what they're seeing happening in Western Europe or certain parts of Western Europe, the US. So I would say that the mood's not negative. The mood is the world is not the same place anymore, and there are huge changes coming. We're not quite sure what they will be. But in the meanwhile, I think there's a perception that, if we want to invest, it's best to invest in growth assets, pick asset allocation funds, and stick with it. So I would say it's not negative, the sentiment, but it's cautious.
What do you make of this theme, Wayne, the asset allocation trend, rather than just general equity or money market?
Look, I mean, obviously I'm in the savings business, so I'm going to say a professional will manage your money better than what you can manage your money, because that's how I make my money.
Exactly. I'm glad you disclosed that up front.
So I'm going to say that, but anyone can manage their money if you've got the time to do it. So investments is not difficult. It's just a question of allocating the appropriate amount of time to it. Now, if you're a worst person working out there and you haven't got the time, go and hopefully pick yourself a good asset manager and get them to do it for you. And the balanced funds, the asset allocation funds, is probably the right way to go. One of the biggest determinants of investment returns is what asset you buy. If you'd have bought cash in the last 15 years, you gained. If you'd have bought equity, you've done extremely well. If you'd have bought bonds, you've done okay. If you'd bought property, you've done okay. So hopefully you give it to a manager who knows what they're doing and over time delivers you a decent return.
And then let's just have a look at that. I think let's end on these stats. Over 10 years, domestic general equity funds returned 17%. Domestic money market funds returned an annual 9% for the 10-year period. Thank you very much, Leon. I appreciate you joining us in the Cape Town studio. Leon Campher from ASISA, and of course a big thank you to my co-host Wayne McCurry from Momentum Asset Management.